Sahak, it's great to have you this morning. Where do you stand? Have you been listening to our conversation? Are we in this bear market rally? You can't help. I know a lot of people note on this program, too, that the dot-com bubble saw 4 bear market rallies of 20% or more, each one testing new lows.
Thanks for including me in the conversation this morning, Deidre. Yeah, it's a lot of stuff that came out over the last few days, since really late last week with these 13F filings. But net, as we go through the June quarterly filing showing investors selling many of these tech stalwarts and mega caps as this was a source of funds after the selling or grossing down from the high flyers or the pandemic winners, which occurred mainly Q1 of this year. So no profit, and these unicorns sold off first. And then the next place that these investors went to were some of these mega cap stocks, which was a source of funds for them. So on aggregate, investment firms have decreased tech holdings. And to that point, that brings us to today, where we have positioning remarkably low. Flow dynamics have been of hedge funds, systematic funds, quant type funds taking down exposure via covering shorts. So there's been a lot of non-fundamental buying, if you will, that's really propelled the recent move higher across the spectrum of low quality, long duration, and then now more mature stocks with balance sheets. And so investors are now being forced to chase performance, which is maybe some of what we've seen currently. And the squeeze has been real, and the pain certainly palpable. And just to top things off, we've got this buyback market that's been very active, and on the heels of a 1% excise tax coming at us at next year, we think that this continues into the rest of this year, and that a lot of upside momentum behind tech and this tech move higher as investors just have been underexposed to the group.
What keeps it going, Sahak, is that the idea that inflation has peaked, and it feels like the market is baking in that the Fed is going to be less aggressive, potentially even pausing rate hikes. But that is not the commentary that we're hearing from Fed officials. And we're heading into another earnings season where demand could weigh heavily. Lack of it, that is.
Correct. So I think what can, move this higher, a lot of focus, I believe, on this spread between the 10-year yield and tech funds. The tech index and the 10-year yield, the gap has certainly been narrowing. And as that continues to do so, I think tech will continue to work its way higher. And I think what also propels these things even higher is that technically the backdrop here has shifted. If we look at the broader market, we're still within this bear market. Tech specifically is changing course. And when we look at tech and the S&P Tech Index, we're breaking above key bearish resistance lines. And as we break above these, I think this will only foster more and more money to come into the area. And when we take a look at a sector rotation chart, the tech sector is actually the only S&P group that is in the leading quadrant now. So